I have spent hours creating two leverage ETF lists with all the ETFs that matter, one for European investors and the other for American investors. These two lists, these two cheat sheet lists are all the ETFs that matter in the market. So in this video, I'm going to give you all the ETFs and also how to use them. And you will also be able to download these two lists of all the ETFs that matter. If you're an American investor or you can have access to US ETFs, this list gives you all. But if you are an European and you don't know how to get into these ETFs because Europe has more strict regulations, this video is definitely also for you. All right, I'll see you in a second. Hey guys, my name is Henry and I'm the founder of the Henrique Wealth Academy, where I talk everything about leverage ETFs and how to accelerate your wealth. But in this video, I want to give you an overview of all the leverage ETFs that are available and that matter in the US and in Europe. But first, what's a leverage ETF? A leverage ETF gives you basically multiples of the return of the normal index ETF. So S&P 500 is basically a basket of the 500 biggest companies in the US, and you have ETFs such as VOO or SPY that track the S&P 500. And then you have 2x and 3x leverage. And these 2x and 3x leverage will give you twice or three times the daily return of that leverage ETF, which is a great feature. So if SPY in one day return 1%, SSO, for example, the 2x will return 2%, and UPRO will return 3%. Same thing on the way down. If SPY loses 1%, SSO will lose 2%, and UPRO will lose 3%. The good news is that most of the times markets are going up. So leverage ETFs are excellent to compound your returns over time and really to give you outstanding returns. So in fact, leverage ETFs usually don't deliver the 2x or 3x that they promise, other than just on a single day. So in periods other than one day, longer than one day, they don't deliver the 2 or 3x. For example, QQQ Nasdaq-100 over the last 15 years returned around 1,500%. How much did the TQQQ return? Did it return 3 times? No, not really. It actually returned 20 times the returns of the QQQ. It's interesting that the 3x leverage ETF actually returns 20 times the underlying. Okay, it's returned 30-something thousand%, which is mind-blowing, and it's very good to compound your wealth. So these ETFs can amplify your returns, can also amplify your losses, and full disclosure, they are very volatile because they also multiply the volatility of the underlying. Before you move forward with leverage ETFs, you need to understand this. Leverage ETFs are not suitable for short-term trading. Using leverage ETFs for short-term is a guaranteed loss because no one can really time the market. You don't know where the market is going tomorrow. Most short-term traders, especially the ones that are leveraged, lose money. 90-something% lose money. But if you use leverage ETFs for the long term, the longer the period that you hold your leverage ETFs, the more likely you are of making money. In fact, for any 10-year period, you have a 90-something% probability of making money. I will make another video about this, but that's just the numbers and the statistics. All right, let's start with the key American leverage ETFs. Okay, these leverage ETFs are available for most people in the world. Also definitely available in the US. They are not available, most of them, for European investors, but later in this video I'm going to give you, if you're an European investor, I'm going to give you all those ETFs that are available in Europe and that replicate these American ETFs that I'm going to share now. So to start, S&P 500. S&P 500, 500 finest companies in the world. The 1x leverage ETF is SPY or VOO. Actually, VOO is usually a little bit better because the fees are slightly smaller. The 2x version is SSO and 3x is SPXL or UPRO. Usually I use UPRO. Well, now S&P 500, as you know, it's weighted according to the size of these companies. So the top 10 companies Apple, Microsoft, Nvidia, and so on have a very large weight. So these S&P 500 is very well diversified, but it gives a lot of weight to the big companies, to the Max 7, to the FANG, right? So if you want to have equally weighted exposure in the S&P 500, you have RSP, the 1x leverage, and the 2x leverage is URSP. It's the equally weighted 2x S&P 500 ETF. Okay, what about Nasdaq-100? I really like Nasdaq-100 because it's a little bit more concentrated, 100 companies. And in fact, 80% of the Nasdaq-100 companies are somehow connected to the AI buildup. You have the data center companies, hyperscalers, you have the software companies, you have the social media companies, you have the chip companies and semiconductors. So I really like Nasdaq 100, and the QQQ, the 1x leverage ETF, usually performs much better than the S&P 500 SPY. If you want to have 2x exposure to Nasdaq, it's the QLD, and 3x exposure is our famous TQQQ, which over the last 15 years returned 30-something thousand % return. But one issue with Nasdaq 100 is, again, it's the top 10 companies in Nasdaq 100 have like 50% of the weight on Nasdaq 100. If you want to have equal exposure to all the Nasdaq 100 companies, so it will be 1% for each company, you have the 1x QQEW and the 2x EQQQ. It's a new ETF, EQQQ, which is 2x leverage, equally weighted Nasdaq 100. Pretty cool, right? The Russell 2000 tracks small and mid-cap companies. The 1x leverage is IWM, 2x UWM, and 3x TNA. So if you want to tilt your portfolio towards smaller size companies, which actually sometimes perform well, especially during market downtrends, TNA, UWM, and IWM can be an option. In my list, you also have other ETFs such as the mid-cap 400, you have 1x, 2x, and 3x leverage, you have the Dow Jones companies with also 2x and 3x leverage, which will have performed very well. And then I give you access to all the different sectors. You have sectors for each one of these sectors. You have 1x, 2x, and 3x. You have communication services, consumer discretionary, which is actually one of the ETFs that I recently added in our community. I added UCC, which is 2x consumer discretionary. Have consumer staples, energy, financials, healthcare. I've been investing in healthcare also in leverage ETFs, including RXL, which is 2x leverage ETF, and Cure, which can be the cure for your portfolio, which is 3x leverage ETF. Now, of course, now I'm not going to give you every single ETF here because I'll have to make a very long video and it gets a bit boring for you, but you will be able to download these ETF lists from the Henrique Wealth Academy, okay? Link in the description, and you can sign up. You have a 7-day free trial. You download the lists, and if you want, you can cancel the trial. If you like it, you can stay there. There is also a 5-hour-long leverage ETF course. I also have a 1 hour something leverage ETF strategy video where I disclose 18 different strategies that will perform very well for leverage ETFs. But anyway, check the link in the description. So other than that, you have also, as I was saying, healthcare, industrials, 1 and 2 and 3x leverage ETFs, materials, real estate, technology. Technology, you have probably heard of ETFs such as the XLK or the TECL, TECL, which recently has been performing extremely well. The 3x leverage, right? Utilities, semiconductor, you have the 1x index, SOXX, and USD is a 2x leveraged, and SOXL. Now, I know that many people have been investing in SOXL, and SOXL, well, last 1 year performed extremely well, last few months not well at all. So SOXL has been destructive to portfolios more recently. But the problem is that the semiconductor index should not be leveraged 3x, should be leveraged only 2x. And that's why USD, the 2x leverage ETF for semiconductor, performs better than the 3x SOXL. Very interesting, right? I detail all this stuff in my other videos. You have also software, retail, home builders, AI and technology, and also bonds. You can also leverage a little bit your bonds component with, you have TLT, 1x leverage ETF, UBT, 2x leverage ETF, and TMF, the 3x leverage ETF for 20-year plus treasury bonds. This can be a very good way of balancing your portfolio and diversifying with uncorrelated assets. That's why I currently have around 15% of my portfolio into TMF. Anyway, and then you have the MAG 7, which for the 1x is MAGS, M-A-G-S. For 2x you have FNGO, which is not exactly the same, but very similar. And for 3x, I will go for TECL, TECL. Now let's look at Europe. One of the main reasons why I'm making this video is because American ETFs are very, very easy to find, but European leverage ETFs are much harder. And I had so many European viewers, European followers asking me to make a video and asking me what are the leverage ETFs available in Europe. They are much harder to find, but you also have them. So let's get into it. And the reality is that the reason why American listed, US listed leverage ETFs are not available in Europe is because of regulatory reasons. Regulations in Europe are a bit more strict when it comes to reporting. And unfortunately, most of these ETFs that I just talked about are not available in Europe, but we have solutions. You have solutions, and I'll give you the 1x, 2x, and 3x leverage ETFs that are listed in Europe, in the London Stock Exchange or in the Frankfurt Stock Exchange. So if you are a European resident, you have access to these ETFs finally. So now I'm going to give you the index and sector ETFs available in Europe. And after that, I'm going to tell you which ETFs you should not touch in Europe. Because despite the fact that in Europe the regulations are a bit more stricter, you have some ETFs that are absolute dog poop. And it will be guaranteed if you invest in certain leverage ETFs available in Europe, you will lose your money. Okay, so I'm going to give you the ETFs that are kind of fair to be included in a portfolio for an European, and I'm going to give you also the ETFs that you should not touch in Europe. And to start off, of course, we have S&P 500. For the 1x, I will choose probably CSPX. CSPX is an S&P 500 ETF, but very important thing, instead of paying dividends, it reinvests the dividends. So actually, CSPX compounds faster than other ETFs that pay dividends. And it's also more tax efficient. Pretty cool, right? So this is the CSPX 1x leverage S&P 500. For 2x, you have the XS2D from X-Trackers. And for 3x, you have the 3USL leverage ETF. Then you have the Nasdaq-100 ETFs. For the 1x, you have the EQQQ or the CNDX. For the 2x leverage, you have the LQQ. And for 3x, you have the 3QQQ or the QQQ3. In Europe, you can also invest in the MSCI World. So it's like world stock market. You have like 3,000 different companies. And the 1x is SWDA, while the 2x is LW2. If you want to leverage European stocks, you have an index called the Euro Stoxx 50. This is the SX5E for 1x leverage, and the 2x leverage is the LVC ETF. In my leverage ETF cheat sheet, which you can find in the Academy, you can also have access to other country-specific ETFs that leverage, for example, the German stock market, the DAX or French stock market. But then you also have some sector leverage ETFs. Not all sectors are available in Europe, unfortunately, when it comes to leverage ETFs, but at least you can leverage semiconductor, financials, artificial intelligence, and for these ones respectively, you have SOXL, the FAS3, and the AI3L, which is to leverage AI 3 times. If you want to leverage the FANG is basically you have Meta, Amazon, Google, Microsoft, all these good companies. You have the FAN3 and the FAAN for 3x leverage. Oh, and you can also use the FNGO to leverage it by 2x. Now, here are the ETFs that you should never use, okay? There is an ETF provider in Europe called Leverage Shares, and most of the ETFs that they issue is absolute dog poop. You should not touch them, ever, okay? In these ETFs, they have a bunch of ETFs that are, for example, 5x leverage. They have 5x leverage Nasdaq, 5x leverage S&P 500, 5x leverage individual stocks, 5x leverage gold, and it's toxic dog poop. Okay, if you leverage too much, you will have volatility decay, you will lose money. Okay, so because 5x is too much leverage. The sweet spot when it comes to leverage, according to the Kelly criterion, which is an indicator that I created and I make available to all my members, the optimal leverage is usually between 2 and 3x, never beyond 3x. 5x leverage is absolute toxic, and it will destroy portfolios. You should never hold a 5x leverage ETF. Then they also have a ton of 3x leverage ETFs that are leveraging very volatile stocks. 3x Nvidia, 3x Netflix, 3x Microsoft, 3x Tesla. Absolute dog poop again. If you use these ETFs, you will, maybe, I cannot say lose all your money, but you will see drawdowns of 90% or more. So basically, most stocks, most individual stocks are way too volatile to use leverage ETFs. You should never use them. I'm okay using leverage ETF for indices and sectors because they are fairly diversified across dozens or hundreds of companies. Individual stocks and commodities are way too volatile to do any leverage ETF, okay? The other category that I absolutely hate when it comes to leverage ETFs are the inverse ETFs. Inverse or short ETFs are basically ETFs that go up when the prices go down, okay? And these ETFs just trend to zero. Most of these ETFs end up losing all their money. And if you have invested in an S&P 500 or Nasdaq, inverse ETF, basically these ETFs over time, they lose 99.99% of their value. And because it's almost impossible to exactly time the market, you should never hold this kind of ETF. It's not worth it. Okay, so this is basically the list of leverage ETFs that I wanted to bring to you. If you want to download the 2 leverage ETF cheat sheets for Europe and for the US, you join the community. You don't need to pay anything, okay, because you have a 7-day free trial. If you want to stay, you stay. If you want to cancel, you cancel, okay? No questions asked. In the meantime, you download the cheat sheets with your leverage ETFs. You can take the courses. I have courses, I have strategies about leverage ETFs. You can participate in the community. And if you like it, you can stay. If you don't like it, you leave. I hope you have enjoyed this video. Give it a like, subscribe. Let me know if you have any questions in the comment section, and I'll see you soon. Bye.